Hello, amazing people, and welcome back to SAFOREX Academy, your number one hub for becoming a smart, consistent, and profitable Forex trader. I hope you're happy to join us again on today's episode as we'll be looking at candlesticks and time frame. My name is Joseph Samuel, and in today's class, we are diving into a powerful topic. Like I said, it's candlestick and time frame, which is the true language of the market. If you have not subscribed to this channel, please, I'm begging you, subscribe, click on the subscribe button, turn on the notification buttons, like our videos, comment, and we're going to enjoy every bit of the videos we're going to be releasing out here. All right, so back to our business of the day. You see, we're talking about candlesticks and time frame. You must understand that every candlestick is a message from price. It tells you who is in control, when the battle is indecisive, and when a major move might be coming. But that message means different things on different time frames. That's just it. That's why you see that some people will say, they see 5 minute time frame, the candle is going up, candles are going up, while on 15 minutes time frame or 1 hour time frame, candle is coming down. All right. This section will teach you what candlesticks are and how to read them properly. Though we've done a class on candlesticks morphology, if you've not watched it, you can go back there and watch it. But this will just be a recap of candlestick morphology, then alignment with time frame. Okay, so we'll go straight to what candlesticks are and how to read them properly. The deep meaning behind their structure, that's the wick, the bodies and the patterns they form. Then how time frames affect what candles tells you. They will also talk about how to match candles with your trading style. I think that's going to be an interesting, and you're going to calm down, take your chicken, take your biscuit, take your cornflakes, take everything you want to have. Get a glass cup of water, and let's dive in. All right, so let's begin. What is candlestick? We understand that candlestick is a virtual representation of price action over a specific time. I'll come again if you didn't get that. I said a candlestick is a virtual representation of price action over a specific period of time. Every candlestick contains 4 important information or 4 important pieces of information. We discussed earlier, but still on my chart here you can see it, where we have the high for a bullish candle. Okay, let's take for instance, let's take a bullish candle. Well, though every candles have a open, a close, and a high and a low, right? So, but for a bullish candle, we'll see that price actually opens from here. Know that price is actually going up, right? Market is going up. So price opened at this point and traded a bit lower. Then buyers again push it up again. Okay, because for it to trade lower here means that the sellers actually came into the market as soon as that candle opened. Okay, so it traded here and buyers rejected the price and moved it up to this high, and sellers picked it up, and the buyers insist that the market has to close here when that time frame was completed. Okay, remember it at each time frame, each different candles. Okay, so a candlestick has a high. That's the highest high it's ever traded to. It has the body, then the close is when the market or the candles actually close. So for a bearish market, you see that the body of the candle, which is the thicker part, right, which shows the range between the close and the open, right? While the wick, this wick here, wick is WICK, which shows how far price moved beyond the open and the close. Okay, so from between the open and the close here, between the here and here, this is the wick. The price actually got as far as this place before eventually closing up. That's traded down and closed up, right? So for a bearish candle, which can be also any color, here I use red. Okay, the market actually opens at the top here, traded higher. Okay, then came as low as this point, then close at this particular point. Okay, but that's just the surface. That's just the surface. So let's get deeper into the candlestick psychology. So Every candlestick tells a psychological story. You must know it. You must take note of it. Whatever thing that happens on the price chart is actually a story told by the candlestick in reference to time. Okay, there's nothing you are doing in this life that time is not a member or is not in alignment with. Okay, so a small body, a small bodied candle with long wick. Okay, a small bodied candle with long wick. We've treated it before, but it actually shows indecision. That's an example of your doji. It shows you indecision. That means the buyers and sellers are fighting, and there's no one that is aligned for each other. They don't agree for each other. Why are you speaking like that? All right. So then the one that has a long-bodied candle means strong momentum. Okay, strong momentum. We've seen them on the chart whereby candles has all bodies and smaller wick or without wick at all. The one without wick is the maribuzo. Okay, then a candle with no wick, that's pure aggression. That's the maribuzo that I just said earlier, is maribuzo. So either it's a bull or a bear, right? That means that if it's a bearish candle, let's see, let's just see something on the charts. We'll just keep talking. Let's just be looking at our candlesticks like that. Okay, so now this shows large momentum that the buyers are in position. When it shows a candle with long wick, okay, shows rejection. If it's from the top, it shows rejection from a resistance, okay. But if it's from the down, it shows rejection from a support. So at this point now is the rejection from a support. Looking at this one now, it shows that the sellers were aggressive and they were coming down, but at this point here the buyer says no, so the buyers push it. Now despite the fact that the body of the candle is still red, that doesn't mean the fact that it's the buyers that are in position, sorry, the sellers that are in position. Because if we calculate the length of the candle to the high of the candle, from the low to this high, you see that the wick is smaller. That implies that price pushed up like this shows that there is more momentum of buyers compared to the sellers. Okay, price pushing up like this shows that there's more momentum of the buyers compared to the sellers, and that is why you see that it shows rejection. And after it, you see what? A green candle showing the market buying up and up like that. So you must understand the story the market is telling you. So don't just memorize patterns, don't just memorize candlesticks, don't just memorize patterns. Okay, understand the story behind every candle. Every candle tells a story, so you must understand it, you must read it and pay attention to it. Okay, what happened here now? Here now the buyers and sellers are at equilibrium. I see that the body of this candle and the wick of this candle to the eye of this candle, they are at equilibrium. This is very small. Okay, this indecision candle, even though the buyers still possess it more. Okay, so you must take note of those ones. Okay, you will look through, you will see different candles with different stories. Okay, different candles with different stories. What are they saying to you? What are they saying to you? Okay, you can watch the market morphology if you have not watched it, and go back and watch market morphology and see. All right, so now let's get in time to we understand the basics of time frame, right? The basics of time frame. Now let's get into sorry, the basis of candlesticks rather. So let's get into time frames. Now, what are time frames? If we check at the top right here corner, you will see time frame. Price is very important. Knowing the price is very important. You see, the chart is just like our graph that we do in primary or secondary school. Okay, that we do in primary or secondary school, whereby you plot y against the x-axis. Okay, now at this place now we are plotting the time in reference to price. Okay, it just time in reference to price. That's how it is now. So it is the same thing with your graph. You cannot read price without reading the time. Very essential. You cannot read price of the chart without paying attention to the time. So time is very, very essential. All right. So what is time frame? So if you check here now, you understand that a time frame is the duration one candle takes to form. One candle, the time it takes one candle, this particular one candle to form. That's what we call time frame. So that means on 1 minute time frame, it takes 1 minute for each of this candle to form. So after this one opens, okay, opened at this point and traded down here, and buyers push it up again, traded to this high, and it closes. Every of those actions finished under 1 minute. Under 1 minute, they were done with that action, and they move on to the next minute. Another section happens. The market opens again at this point and what traded lower a bit, minor wick, buyers push it up again to a certain high, sellers push it down and it's closed, but the buyer still dominates the market. Funny enough, the sellers said they no agree. They push the price down again. They open and push the price down and close without a wick, and the buyers pick it up again and pull it higher. That is how market does every now and then. That's the stories they are telling. So you must understand that story in time. So it takes 1 minute, 1 minute, 1 minute. So if you check, you see 1 minute here. So that means that on 5 minutes, it takes 5 minutes for one candle to form. This is a rejection candle. You can see this an hammer here. It takes 1 minute for it takes 5 candles, 5 minutes for one candle to form on 5 minutes time frame. So as I switch between time frames, it shows me that it takes me that number of time frame for that one candle to form on that space that it is. Please don't get confused here. So that means that if I want to see 15 minutes candle if I'm on 1 minute time frame and I want to see 15 minutes candle, that means it will take 15 candles to form before a single candle will appear on a 15-minute time frame. I hope I'm clear. So if I 1 hour chart, so if I go on 1 hour chart, each candle here summarize 60 minutes in reference point, 60 minutes. So if I mark out this singular candle and I go on a 1 minute, you will see how large it will be. You see how large it will be. Can you see? Can you see how large it will be? If we go to the beginning, so if I count the number of candles from here to the end here, it's going to be 60 candles. 60 candles. So that is what it means, that means 1 minute. So you can calculate that on 15 minutes. If I want to see of this 1 hour candle now, right? This 1 hour candle now, that implies that there's something here. I just drop down. Let me just. There's something here. You will see that on 1 minute time frame, you see many candles dropping lower like this, right? Dropping lower. You see sell. Market came down, and the buyers push it up till around here. Now see what happened. What was the reaction on 1 hour time frame? See the reaction on 1 hour time. It only shows a wick. This minor wick you are seeing of this candle, let me zoom it so that you can see it clearly. This minor wick you are seeing here, shows those were the buy actions that happened in that lower time frame. So you can see it's actually outside the box. So you can see everything here, that buyers price actually traded to a very low price, before they come and close, or before they open here again and push up higher and come down again and close within this box. That is how rejections and wicks. That's the story. And that's clear on that reactions on wicks. So it's not as if wicks just happen. Even though the wick on 1 minute time frame shows that there are seconds and picoseconds whereby price actually reacts from. Okay, so and here's the key part is that the same price can look different on different time frame. Yes, the same price can look different on different time frame. Just like I showed you earlier. Here it's just showing a week, but on 1 minute time frame you see multiple candles. Okay, now without wasting much of our time, let's go on candles across multiple time frames. Now let's say Euro USD, right? Euro USD, or let's use this Euro JPY that I'm currently on. Let's say Euro JPY now is moving up on daily time frame. So let's check daily time frame. Let me delete that stuff first. And very good. Euro JPY is also moving up now. Now it's actually moving up. Can see it's actually going up, right? It's going up. The market is going up now. Bullish trend. But on 15-minute time frame, you will see multiple pullbacks. Multiple pullbacks. You will see pullbacks. Does that mean that the price is reversing? When I mean pullback, I mean market will be retracing, like it will be going, forming like this. It will be coming down. Those are pullbacks. But does that mean market is retracing or reversing? No, it does not mean market is reversing. You know, we have there's what called reversal, retracement, and then when we get to market structures, we understand those ones better. Okay, it does not mean market is reversing. Reversal means that it's a total change in direction of the market. So it does not mean that market is actually changing direction. No. So that's why multiple time frame is actually very essential. It just means that you zoom into a microscopic movement. Let me call it that way. A microscopic movement, because lower time frames they said they are filled with noise, indecisions, and traps. Okay, and trap candles, right? But that's the effect of candlesticks time frame. So what actually happened is that you use your higher time frame to find your trend, then you use mid or lower time frames to find your signal entry, your entry signal. So the method will keep you in sync and with the market while you are refining your entries. Okay, when you go to entry refinement and accuracy, more accuracy, you get to know all of those, top the analysis and the like. Okay, before we move further to a more practical example, let me just remind us this. No, we've said it over and over again. Okay, that is trader's lifestyle and then time frames. Okay, as a trader, your choice of time frame depends on your style and availability. I always say it. There's nobody that cannot trade forex markets. No matter how busy you are, there's always a room for you to fill in. Okay, so or no matter how less busy you are, there's always a room for you to fill in. All right, so we know we have about four to five four trading styles, right, of traders. Okay, we have the scalpers, we have the day traders, we have the swing traders, and we have the position traders. Now we've already said that I'm repeating myself for emphasis sake, so that you know the type of trader you want to be. You don't say that I'm busy, that's why I cannot trade forex. No matter how busy you are, you can trade forex. The scalpers, they operate within the time frame of 1 minute to 5 minutes. So those guys they don't waste time, and the duration they spend in the market is just between seconds to minutes. So that implies that if you're a scalper, your time frame for my analysis is just 1 minute, 5 minutes, while your entering is on 1 minute. Don't say I'm a scalper and you are gambling trade. No, scalpers, they know what they are looking for in the market. They don't just take trades anyhow. They don't, because market is moving like this today, also they want to quickly run in and rush in and rush out. That's not scalping, that is gambling. And we are not gambling here. We're not teaching you how to gamble. We're teaching you how to make informed decisions in trading on the chart. Informed decision. You want to make informed decision. Be confident that this is what I see and I know that this is where the market is going to. So even if it does not go in your direction, at least you are still confident that, oh, this is why I picked this thing. Not that you see the market and you jump into the market. No. You must have a reason for entering a trade. So day trader, which is what most of us are in, your analysis time frame is between the 1 hour and 15 minutes time frame. So if you analyze on 1 hour, you want to come and pick your entry on 15 minutes or 5 minutes time frame. So people go as low as 1 minute for precision, for sniper entries. So we'll get all of those ones for precisions and sniper entry. But we stick to 1 hour. Then you analyze on 1 hour. That means you know the trend on 1 hour, and you go to 15 minutes or 5 minutes to pick your entry. That's what that means. Then for swing traders, those are those who want to leave trade for 1 or 2 days. As a day trader, you don't leave trade overnight. You are not trading. Just close your trade for that day and forget what happened and come back the next day. Okay? Why for swing traders, you want to operate within the period of 4 hours to daily time frame. Okay? Why for position traders, they operate within days to weeks to months. Understand the fact that when months, the time frame here, the time frame does not end in this week. If you press this arrow down here, you will see months, 6 months, and the likes. Sorry. So you are seeing it 1 week, 1 month, 3 months, 6 months, 12 months. So these are position traders. There's nothing concerning you with that one if you are a day trader or if you are a scalper or you are a swing trader. So, but the truth of the matter is that context is everything. Context is everything. Never judge a candle without understanding its time frame. I repeat, never judge a candle. They said I don't judge a book by its cover. I don't judge a cover by book. Now they judge book by cover because your book is not fine. People will never attract customers. So, but in trading, don't judge a candle without understanding its time frame. Okay. So now let's get into the practical aspects or practical examples that multiple time frame breakdown. Okay. So let's say this Euro JPY we're dealing with, right? Let's say we see a bullish engulfing candle. This is a bullish engulfing candle. So it's a very perfect one. Let's say we see this bullish engulfing candle, right? On 4 hours time frame. Okay, let them just take this daily time frame for instance, right? That means buyers are taking over, right? That means buyers are taking over. Or buyers are in the market, buyers are putting in position of the market, right? But on 15-minute time frame, the market is still dropping because of a short time retracement in progress. So as a professional trader that you are, let me address as you are, okay? You don't just jump and enter the market, say buyers are in position, so you want to buy the market. I said the in 15-minute time frame, for instance, sorry, let's go back to, let me go on 4 hours time frame. We will see engulfing, perfect engulfing, right? Perfect, right? Good. Let's just go. Let's use our daily time frame. Let's mark that one since that's single, and let's mark that one out. Okay. So if I mark this out like this box out like this. Now imagine I want to trade this market. Oh, I already saw this engulfing candle, right? Anyway, I hope you just got it. I'm just trying to mark this candle and this candle, but my rectangle tree is not picking it up, right? So now I already saw this engulfing candle, and I know that the market wants to buy. What I'm looking out for is bullish trend. It's bullish. It's what I'm looking out for. I want to join the buy. I cannot just join the buy here. So even if I come to say 15 minutes after I want to pick my entry, as a professional trader, I don't just jump and enter buy here. No. I want to wait and see that the market or the 15-minute time frame is in alignment with the uptrend. And what does it mean to be in alignment with the uptrend? Meaning that I want the market to retrace down to a discount price, a price that is very, very low, like this. Okay, like up to this place, like this. And then before I will now join the buy, and I will not just join buy, I will see confirmations. Confirmation like I want to see possible if I want to be a very smart and sharp, precise trader, I might look for, I want to see like a hammer at this point here, or a strong weak rejection candle. Okay, I want to see it here. Once that one form, I will enter. There are some people who do stacking. They just enter like that and stack their position immediately after that candle finish forming. That hammer that finish from, they just stack and enter it and put their stop loss below the wick of that candle, or this lowest low here. Okay, and they target the high if they need be, if they can patiently wait for that. Okay, some who cannot target the high, they just stack and just target just small pips and they leave the market, right? But you as a beginner, one of the things you want to look out for, if you are able to sight that candlestick early enough, you enter palm, or you can just wait for market to do what's called change of character. Means market do like this, retrace. You know, we've talked about the fact that for buy market to be forming what, a high, a higher low, and a higher high, right? You want to see the market form something like this and something like this. That becomes, now it has changed direction. It has do a break of structure here for you, right? It already broke structure here for you, and you will now wait for market. You don't just say, okay, it has break structure here for me, and now it's now buy, and now jump and buy the market. No, you wait for market to now do retracement. I just say reversal. Okay, retracement here. Then once you do retracement here, then you now pick the market, and you now pick the market at this low here, and then your stop loss might be below here or below this low. You will now wait, join the market to this high or above it, and you leave the market. That is a perfect trade for you. So that's how you match time frame analysis from higher time frame to lower time frame. I hope that's clear. And don't forget that you can use your hammer as your entry confirmation, or a breakout candle like that. So that's the power of reading candlesticks within their time frame. Okay, so now general tips, or let me call it a recap. Okay, the recap is the fact that, number one, always analyze higher time frame first. In any whatever decision you are taking, always analyze higher time frame first. Don't react emotionally to one candle on 1 minute or 5 minutes, or else you will just say, let's first academy said that when I see bullish candle, bullish engulfing, I just buy on 5 minutes time frame. You'll be first academy taught you that too. You don't just react. You want to see that they are in confluence with other condition, market conditions. Like, are they, if it's for buy, are they on the support level? Are they within a demand area where buyers are interested in the participate in the market? Okay, then candlestick patterns like the engulfing, pin bar, inside bars, and the like, right? They only works well when they are in the right context. I've said it. Don't use them in isolation. Okay. Then whenever you see wick in candles, wicks are very, very important. I just see some that they just neglect wicks and just treat only the body of the candle and say, no, you don't trade like that. I can tell everybody that you don't isolate wicks when you're analyzing your market. Wicks are very, very, they are telling a very powerful story, because they are telling you that price is rejected. At that zone, price is rejected. So they give you a clue of what to do. Okay, then candlesticks or candle size plus the position, that's either in that support or resistance area or order block or fair value gap. They are very sweet entering signals, meaning that when I see candlestick size, like maybe an engulfing candle within a fair value gap, or a rejection candle, or an indecision candle within a support zone, I know what I want to do immediately. They are key entry signal for me. Okay, so you want to see those actions, those candles in alignment before you now pick and go in that direction. Don't just pick trades anyhow. Calm down, pick trade, understand the time frame, the model at which the market is working in, and you'll be perfect. You'll be perfect with time. Okay, so let's round it up at this point. Your assignment. Before I forget, now I'll give you two tasks. The number one task with subsections. Go to trading view on or MT5, anyone you'd like to use. Pick a trading pair, either GBP/USD. Don't use EUR/JPY that I did here, or ZAR/USD, and don't use EUR/JPY. Use another pair entirely. Check daily time frame. Okay, then tell me what is the current trend. Identify the current trend. Then identify one strong candlestick pattern. When I mean one strong candlestick pattern, it can be an engulfing, it can be a pin bar, it can be hammer, it can be doji, but a one strong candlestick pattern. Okay, then now switch to okay, let's say 1 hour or 15 minutes time frame. Switch to 1 hour 15 minutes time frame, and see let me say, see the alignment or conflict, or let me say, what do you see there? Is it alignment or conflict? If it's not conflict, if it's alignment, whichever way, what will you do in that position as a trader? What will you do? So screenshot your chart, draw out what you will do. If it's in alignment, you leave it. If it's in conflict, you say what you want to do. Okay, then screenshot your chart after you have done all the map out. Okay, the marking out, like I map out my one, I draw what market to retrace to, and what I expect market to do. Screenshot your chart, then send to the group. So the task 2 is journal these questions 2 down. We said what's the difference in candlesticks candle size across multiple time frames? Let me repeat it. What's the difference in candle size across multiple time frame? Then secondly, how does wick behavior changes as you go lower? I explain something, meaning that if you pick higher time frame something and you see and you draw it out and you go on lower time frame, I did an example with along that. How does the wick react? How does it change? What happens? Okay, what really happens? Okay, then would you take a trade based on only 15 minutes time frame candle? If yes, why? If no, why? That means why or why not? Okay, so share your charts and answers in the group or on the comment sections. You can do. So that's it for today's masterclass on candlesticks and time frames. Remember, a candle is not just a bar. It is a reflection of traders' emotion, order flow, and market psychology. Okay, I'll repeat that for you. A candle is not just a bar. It is a reflection of traders' emotion, order flow, and market psychology. And time frames helps you to understand which story you are listening to. So you must know that time frame is your friend. It's not as let it understand. Just like stations, I want to watch NT, I want to watch Channel TV, I want to watch Z World and the likes, right? So time frames help you to understand which story you are listening to. Okay, so don't joke with time frame analysis. Don't joke with time frame. Don't just pick trade on any time frame and do market anyhow, right? So if you get value from this, don't forget to like this video, subscribe to SAFOREX Academy, comment below what time frame do you use to trade and why did you use that time frame to trade. Okay, so in our next section, you don't want to miss that next trade. You don't want to miss it at all. You really don't want to miss it. We're going to be dealing with something sweet, something marvelous, something that every trader cannot do without. I know what that is. It's more you are entering into the market structure. You see, accumulation of candlesticks forms structure. You cannot read the candle in isolation because they don't stand in isolation. They form and they tell the story in a journey of cycle. So how do you read all this nonsense? Let's call it nonsense. Sorry, I call it nonsense. How do you read all these things that just fill up and are just moving and you call the candlestick in totality? How do you read them in totality? So that we're going to be getting into in the next class. You don't want to miss it. So thank you and see you in another class. Peace out.